So we got an interesting week ahead of us. I'm going to cover in this video the whole entire market in terms of S&P, NASDAQ, and Dow Jones, including the economic calendar, plus investor sentiment, share my thoughts and opinions. Like always, I'm not a professional, so please do your own due diligence and research before buying and selling. And some of the key levels I want to cover, I think these are levels we might potentially bounce off of. Futures are down for the time being. More headwinds to the downside is coming, basically, essentially. Tariffs, mix, all that stuff. Plus, we have inflation number data coming up this week for Thursday and Friday, CPI and PPI inflation numbers. But again, I'm going to start off with first investor sentiment, high level for economic calendar, and then go to break down to the technicals of S&P, NASDAQ, and Dow Jones. So in terms of investor sentiment, it has drastically increased additional to the bearish sentiment side, so more downside expectations. Basically, bullish sentiment decreased to 21.8%, significantly lower than historical average at 37.5%. Bearish sentiment has increased to 61.9%, and it is 1 year bearish high for the time being, given that increase. So quite bearish overall in terms of investor sentiment. Economic calendar, we're looking at Monday, April 7th. Fed Governor Adriana Kugler speaks at 10:30 a.m. Then we have consumer credit coming out. Then on Tuesday, April 8th, we have NFIB optimism index for the month of March. Then San Francisco Fed President Daly speaks at 8 a.m. Then Wednesday, April 9th, we have wholesale inventories for February. Richmond Fed President Barkin speaks at 11 a.m. 2 p.m. we have minutes of Fed March FOMC meeting. So be aware of that. So be mindful of that. Again, 2 p.m. minutes of Fed March FOMC meeting on Wednesday, April 9th. Then Thursday, April 10th, we have the following: initial jobless claims for April 5th, consumer price index for the month of March, CPI year over year, which some additional information to provide actually. So for consumer price index, previously it was 0.2. This time around they're expecting 0.1, slight decrease. CPI year over year, previously it was 2.8. This time around they're expecting 2.5, so slight decrease as well. Core CPI, again, the difference between core and non-core is energy is removed out of this calculation because since it's so volatile in terms of prices. But for core CPI for the month of March, previously it was 0.2. This time around they're expecting 0.3, so a slight increase. Again, this is without energy accounted to the data. Then we have core CPI year over year. It's 3.1 previously, this time around 3.0, so slight decrease. So year over year, slight decrease, month over month, slight increase for the core numbers. Then at 10 a.m. we have Fed Governor Bowman testifies to Senate. Then we have Kansas City Fed President Schmid speaks at 10 a.m. Philadelphia Fed President Harker speaks at 12 p.m. And then Chicago Fed President Goolsbee speaks at 12 p.m. Then 2 p.m. we have Monthly U.S. federal budget for the month of March. And then April 11th we have producer price index for the month of March. Previously 0.9, and then this time around it's 0.2 they're expecting, so slight increase. Core PPI for the month of March previously was 0.2. PPI year over year previously was 3.2. Core PPI year over year 3.3%. And then consumer sentiment as well is coming out for the month of April. Then St. Louis Fed President Alberto Musalem speak at 10 a.m. and 11 a.m. we have New York Fed President John Williams speaks. So pretty eventful week. It's going to be pretty hectic for the most part with mix of tariffs, all stuff dragging down, and indications for the S&P, NASDAQ, and Dow Jones are indicating further downside. Obviously, we'll have like a bounce, all stuff. Again, futures have gone down quite significantly, somewhere between the realm of 2 to 4% in terms of futures. They're slightly trying to come back up, but it's not necessarily that much of a jump up, and given how much we've dropped overall. But let's just take a look at it. Right now, we're looking at S&P 500. Specifically ETF SPY, ETF for the S&P 500. Same thing, just different ratio. And the key levels I want to show, because this is quite important actually, is if you've been a viewer of my channel, you're aware of this channel dating back since 2010. We have an upward trend resistance level, an upward trend support level dating back since 2010, and then we have two major crashes dating back since 2010 in terms of touch points. Now this only has 2 touch points. Technically, we'll see if the third touch point ever comes true, and then it'll bounce off it. But for the time being, we're going to the level basically for this first support level dating back since 2010. And essentially, we could be looking at pretty much, there's a couple false breakouts a couple times. So essentially within the zone, I'm expecting to hold us. Now, the reason why I'm stating that the whole entire market is essentially indicating further downside, and they almost all look the same in terms of S&P, NASDAQ, and Dow Jones. So if you look at the 1 year chart, I believe this is 1 year chart, just to double check. No, it's not. Okay, but MAC line right about here indicates if it's in a bearish or bullish movement. For the time being, it is in the bearish movement. You could argue it could probably recover, maybe dead cat bounce kind of style, but volume has been increasing more on the sell side. 5-year chart, bearish movement as well, volume increasing more on the sell side, and all chart essentially pretty much committing to the downside with the bearish movement to the downside fully, with the volume increase more on the sell side as well. So bearish movement coming through. Now the question is, will this hold us? I hope so, because otherwise essentially we'd be coming down to this zone right about here. And in terms of high level, basically I would expect us to see the 50-day moving average anyway as a potential touch point. So right now the S&P, specifically SPY ETF for the S&P 500, is sitting at $505.28. In terms of futures, I think it's down to $492 to be honest, so quite significantly lower. And this level of 50-day moving average on the all chart, just double check just in case, yeah, all chart, then you're looking at $464.41 support. So basically $464 is support. And then I'll show you the upward trend support level as well in terms of points, but the 100-day moving average is at $375.80. That would be quite of a massive drop. I don't know, anything's possible, but I'm not expecting to drop to that level personally. But again, anything is possible, and indications are pointing to downside, uncertainties, so on and so forth. So we'll see. But if you think that this upward trend support level will hold us, then you're looking at pretty much in the ballpark. And by the way, if you go to the 5-year chart, actually, interesting enough, the 200-day moving average is within that level. So I would expect more of the 200-day moving average of the 5-year chart. But either way, this upward trend support level is looking at roughly about, let me just move this here for a sec, price point of roughly about $477. It depends on when you hit it, but $477. And again, my lines are not perfect, so maybe I would argue 475, maybe 470. And then the 200-day moving average is at $466. So $466, personally, I'd be more confident on that. And I could expect us to $466 to hold us, and then we start moving up. But the problem is these drops are quite significant. And the reason I state that is if things don't resolve soon, and given how fast these drops are dropping, then I can see these levels being broken pretty easily, right? Because the previous levels are pretty much getting destroyed for the most part, like as if it's nothing. And again, we're $505 right now in pre-market is, or not pre-market, but futures is about $492. So there's that. Now that's for the S&P. And we'll see for the time being. A little bit more zoomed in, I guess, for the 1-year chart. There was, again, mentioned, like I stated, a couple false breakouts, but you can see clean bounce here, clean bounce here. Zoomed in again for the 5-year chart, yeah. So basically it's showing 478, a little bit more zoomed in, but 478, 477, $475, give or take, if you think this upward trend support level dating back since 2010 will hold true for the most part. But there has been multiple times, right? So we'll see. And then now for the QQQ, so I'm going to be looking at ETF or NASDAQ, but specifically QQQ ETF for NASDAQ, same thing, just different ratio. And just like the S&P, it has an upward trend resistance line, upward trend support level dating back since 2010. There was a breakout since 2020 to 2022, came back underneath, and you can see that line did still hold true. By the way, it did bounce off as support as well a couple times too. But you could see if I zoom in, there was a couple times it held true. There's a couple more period times either way, but resistance, and then it did break through again, then resistance, then it acted as support a couple times, so on and so forth, and then we broke underneath it, and then we're just basically heading back down essentially for the most part. And then the question is, are we just going to head down to this upward trend support level dating back since 2010 essentially? I don't think so personally, but if that is the case, I'm expecting more of this 200-day moving average to hold us, essentially ballpark. But if you're thinking that this upward trend support level will hold us, then you're looking at potentially support in the ballpark range of $350, give or take. Currently, we're at $422.67 US. For the futures, I can't remember 100%, but I think it was at $408 right now for the time being in terms of futures. But if you think this 200-day moving average will hold us, you're looking at $382, give or take. Actually, more specifically, yeah, $382.88. Again, these moving averages do move with as in the data comes in. So, but for the time being, you're looking at $382.88. And that's for the 5-year chart. For the 1-year chart, I guess you could go in for more zoomed in depth of the upward trend support level. And you're looking at, it should be pretty close, really close anyway, but a little bit more detailed. You're looking at support, yeah, 350 once again. So essentially same thing, but I'm not expecting a drop like that unless something major comes down. And then maybe the 50-day moving average could hold us on the alt chart, which is about $381. So basically just like the 200-day moving average, I believe it was a 200-day moving average. So 382, to be honest, I think this would be more of a better indicator because everything's pointing to 382, give or take, unless a major crash to, I believe it was, what was it, 350 or something like that, give or take. Let's just double check one more time. 350, yeah, 354, I guess, or no, it was, yeah, 350 essentially, basically. But that 380 should hold pretty decently for the NASDAQ, specifically ETF, QQQ ETF for NASDAQ, 380, 382, give or take. And hopefully things get resolved where we can start seeing a bounce up to the upside. But for the time being, just like the S&P, the 1 year chart MAC line is indicating more downside with a bearish movement. With the MAC line, volume increasing more on the sell side. 5 year chart, bearish movement as well, volume increase, sell side. Alt chart, pretty much committing to the downside with the bearish movement, volume increasing, and then more on the sell side as well. So pretty much straight downside for the most part. Obviously expect dead cat bounces here and there for the time being until everything essentially fully resolves and becomes clear. I would assume so. Now for the Dow Jones, we're at 38,314 points. And just like the S&P NASDAQ, MAC line, here's the 1 year chart, bearish movement indication downside. 5 year chart right about here, bearish movement as well. And then all chart committing to the downside as well, just like the S&P and NASDAQ. Bearish movement committing starting off. Now it could abruptly end, right? Like we've had times it wasn't as massive, but drops right about here within this phase back in, give or take, of July 2023 all the way till November 2023, and then it pretty much abruptly ended and then started going back up, right? Spiked back up. We could have that. I'm personally expecting that at one point. I'm expecting once the upside actually truly happens, not just a dead cat bounce, I think it's going to be pretty much a riptide to the upside, like a just rip straight to the upside. And then the downside was pretty much not necessarily behind us, but for the time being, it won't be a slow upside, if that makes sense. But yeah, so now for the Dow Jones, what levels you could be potentially expecting as support? I'd be more relying on the moving averages for this one personally, but there is a level that I have set up here. So this level right about here, this is more of a resistance level dating back since 1999 and acted as a resistance in 1999. You can see clean touch points right about here, here, and then there was technically somewhat of resistance zone, I would say, because it wasn't necessarily clean touch points. So technically you could rely on potentially having, I should probably extend this anyway, potentially a bounce off this level, potentially, but I would say more the 200-day moving average because it doesn't look like it's actually going to bounce off personally. But the level you're looking at is 37,500 points. I don't think so. I think it's going to break through it. You would have to more rely on the 200-day moving average. So that is on the 5 year chart, just to make sure. 5 year chart, 200-day moving average, potentially bouncing off it, which is about, where is it? Right about here, 36,195 points. So 36,195 points, potential bounce off that zone. Could go lower, like we've seen back here, back in October 2022. And then the alt chart, we have multiple levels. So 50-day moving average, hopefully it's pretty close. Yeah, so 36,156 points. So there is a chance, but the problem is we're dropping quite significantly to the point I think we probably hit the 100-day moving average at this pace almost, but hopefully that's not the case. But the first one you would expect pretty good results as holding us, I would expect, would be 36,156 points. Then the next is the 100-day moving average at the alt chart at 30,711 points. Other than that, I don't think we're going to go lower. I don't think so, because it would have to be some major stuff, and arguably so, these adjustments are going to have to balance out anyway. So I don't think the continuation to the downside would be as drastic because everything should be baked into the market soon in a way. So, but till then, I'll keep you guys posted and we'll have to assess this day by day. For the time being, be on the lookout for the FOMC meeting, March meeting, FOMC on Wednesday, April 9th, 2 p.m. And then CPI for Thursday and PPI inflation numbers as well on Friday, April 11th. But that's basically it for today's video. Hope you guys liked it. Hope you guys enjoyed it. If you guys did like it and found it beneficial, consider dropping a like. It does help out the channel. So thank you so much for that. I do appreciate it. Thanks again for watching. Take care. God bless and peace.